Good afternoon and welcome to this informational webinar on the Public Service Student Loan Forgiveness Program hosted by United States Senator Bob Casey's office and the Institute of Student Loan Advisors. We're grateful for everyone taking this time to join our call today. I want to start by introducing myself and the other panelists on this call. My name is Kathy Kaber, and I am Senator Bob Casey's Senior Constituent Advocate. Also on this call from Senator Casey's office is Wesley Wissel, who works on legislative issues relating to education and student loans. From the Institute of Student Loan Advisors, we are excited to introduce Betsy Mayotte and Patricia Torkelson. We're grateful for their willingness to join our office for today's webinar. Before we get started, I will quickly note that if you have questions at any point throughout the presentation, please feel free to type them in the Q&A section in the bottom right-hand corner of your screen. Again, that's the Q&A section that you'll see at the bottom right-hand corner. Patricia and Wesley will be monitoring this section to respond to questions. We ask that you please keep your questions general and applicable to as many people as possible since this is a public call. If you have questions regarding your own specific situation, contact information for both Senator Casey's office and Tisla will be provided during the presentation for you to reach out directly. Next slide, please. To give you an idea of some of the basics and the questions that we've been getting, the Public Service Loan Forgiveness Program provides federal student loan forgiveness to borrowers who pay on their loans for the equivalent of 10 years while in qualifying public service employment. That's 120 qualifying payments, which do not have to be consecutive. Unfortunately, many borrowers have struggled to receive forgiveness from PSLF due to the program's complicated and confusing requirements. The Biden administration announced a temporary waiver in October 2021 to address some of these issues and help borrowers receive forgiveness. In the few months since this waiver was enacted, more than 70,000 teachers, healthcare workers, first responders, and other public servants have received approximately $5 billion in forgiveness, more than 4 times the program's previous total. The temporary waiver extends through October 2022. I also want to highlight a recent update that thanks to actions by Governor Tom Wolf, forgiveness from PSLF is no longer considered taxable income in Pennsylvania. Senator Casey worked with Governor Wolf to address this issue, saving PSLF borrowers thousands of dollars. At this point, I want to switch gears briefly to share a little more information about Senator Casey's Office of Constituent Services, and in particular, how our office can assist with Department of Education and student loan related matters. Next slide, please. Senator Casey's Office of Constituent Services consists of a team of constituent advocates who help constituents who are experiencing issues with a federal agency. This includes, but is not limited to, Social Security benefits, missing passports, IRS problems, VA benefits, immigration snags, Small Business Association concerns, and more. Or Small Business Administration, excuse me, so SBA loan programs. With regard to Department of Education and student loan matters, our office is able to make inquiries on behalf of constituents on a variety of issues, including PSLF payment count discrepancies, uncredited payments, public service eligibility disputes, and improper or fraudulent use of federal student dollars on the part of educational institutions. While private student loans are not under the purview of the U.S. Department of Education, we can provide guidance on submitting private loan servicing complaints through the Consumer Financial Protection Bureau. Next slide, please. If you would like to request assistance from Senator Casey's Office of Constituent Services, either with a student loan question or for an issue with another federal agency, please do not hesitate to contact our office at 717-231-7540 or toll-free in Pennsylvania at 866-461-9159. You can also reach out via Senator Casey's website at casey.senate.gov. At this time, I'm going to turn the call over to Betsy and Pat with Tisla to delve more into the specifics of the Public Service Loan Forgiveness Program.
Thank you, Kathy. And thank you for the great introduction. Just as a reminder, I do encourage you to ask questions in the Q&A panel, but I also strongly encourage you to ensure those questions. Now, the Q&A is public. So if you have a personal question about your own situation, the Q&A panel isn't the best place for it. You can absolutely reach out to Tisla. We're a nonprofit whose mission is to offer free student loan advice and dispute resolution. And of course, you can also reach out to Senator Casey's office. We want to take this opportunity to thank the Senator's office for hosting this webinar. The Public Service Loan Forgiveness Program is one that we've worked with thousands of borrowers on. This temporary waiver is making a significant positive impact for borrowers who never thought that they would ever qualify for PSLF. But the fact that it's temporary makes it really urgent that as much outreach as possible is done on the rules and the opportunities for this waiver. So I can't thank the Senator's office enough for hosting this webinar and getting the information out there to the residents of Pennsylvania. On a related note, for any of you that are here that work at a PSLF qualifying employer, I also encourage you to encourage your employer to share information about PSLF throughout your organization. Again, these waivers are temporary. It can be as simple as just sharing the link to either the Department of Education's website on PSLF or our website, which is linked at the end of this presentation. So without further ado, I'm going to get my mug off of the screen so we can focus on the material. And we're going to dive right in. Excuse me. As I mentioned, Tisla is the Institute of Student Loan Advisors. It's a 501c3 nonprofit that was founded with the mission of providing free, expert, and neutral advice to all student loan consumers. I encourage you to check out our website for plain English and detailed information about all things student loan management. All right, so I'm going to kind of warn you ahead of time. We've got a lot to cover over the next 80 minutes or so. And I'm not going to lie, it's a little bit confusing. And the reason it's confusing is because we're covering a couple things that are the same except where they're different. I'm going to start out by covering what I'm going to call throughout this presentation as the traditional PSLF rules. These are the rules that existed before October 6th when the temporary waiver was announced. And these are the rules that are going to exist after October 31st, 2022. So it's important, unless you're someone that's going to hit forgiveness and get your loans forgiven under the waiver in the next couple months, it's really important that you understand the traditional PSLF rules as well, because you are going to need to comply with those, moving forward. I'm going to talk a little bit about how the COVID waivers sort of weave into PSLF, and then I'm going to cover the temporary PSLF waivers themselves. I'm going to do the best I can to make it really clear what applies to quote unquote traditional PSLF, what applies to the waivers, and what applies to both. Again, I encourage you to also check out the Department of Education's website about PSLF and the waivers, and our website, freestudentloanadvice.org, about the waivers, which contains a pretty extensive FAQ document as well. Okay, so for all we hear about how complicated public service loan forgiveness the traditional public service loan forgiveness rules are, if you take a step back, it actually isn't quite as complicated as it might appear to be. So if you don't remember anything else about what I say over the next 80 minutes or so, this is the slide I want you to remember. Because when it comes to the traditional public service loan forgiveness rules, if you think about this slide, this is going to answer 95% of any question you'll ever have about PSLF. So to qualify for PSLF under traditional PSLF rules, you need to make 120 eligible payments, and we're going to define what that is, on an eligible loan while working for an eligible employer. The key here is that all three of these things have to happen at exactly the same time. They don't have to be consecutive, but they have to happen at the same time. So for example, you could be making an eligible payment while working for an eligible employer, but if you don't make it on an eligible loan under traditional PSLF rules, that's not going to count. You could have an eligible loan and be making an eligible payment, but if you're not working for an eligible employer at that time, that month, that payment is never going to count for PSLF under the traditional rules. So again, while the program may appear complicated, if you take a step back and just think about this provision, these three things that have to happen at exactly the same time, you're going to be able to answer 95% of the questions you'd ever have about PSLF. So with that said, let's define what all these eligible things are. The first thing is, what's an eligible loan? The short answer is that an eligible loan for PSLF purposes is any loan that falls under the federal direct loan program. Now that can be a subsidized or unsubsidized Stafford, that can be a Graduate Plus loan, that can be a Parent Plus loan, or that can be a consolidation loan. Does not matter when that loan was made. Direct loans go back to 1994. If you have a direct loan from 1994, that loan is potentially eligible for PSLF. Where it gets confusing is that up until 2010, there used to be two primary federal student loan programs. There was the direct loan program, and there was a program called the Federal Family Education Loan Program. And both programs were exactly the same, except where they were different. They both have Stafford loans. They both have Graduate Plus loans. They both have parent loans, and they both have consolidation loans. As you'll see in a second, for the most part, under traditional PSLF rules, FFEL loans don't qualify, and any payments made on a FFEL loan don't qualify for a PSLF. Now, it can be really difficult to determine sometimes whether you have a direct loan or a FFEL loan. One of the easiest ways to tell is that if you have a Stafford or a Plus or a federal consolidation loan, and that loan was made on or after July 1st, 2010, it's absolutely a direct loan because they stopped making FFEL loans as of July 1st, 2010. If the loan was made before July 1st, 2010, and is a Stafford, a Plus, or a consolidation loan, the easiest way to figure out if it's a direct or a FFEL is to just contact whoever's servicing your loans and ask them if it's a direct or a FFEL. Another way to determine is if you log in to the Department of Ed's website, studentaid.gov, and look at, under the loan, look at who's listed as the lender. If the lender is listed as the Department of Education, 90% of the time that means it's a direct loan. If it's listed as, say, Chase Bank or a credit union or another type of private lender, then that is 100% not a direct loan. That's going to be a FFEL loan. But again, the easiest way to be sure is to just contact your servicer and ask. So again, an eligible loan is a direct loan. Now, there are other types of loans that are not eligible for PSLF in and of themselves. However, they can be made eligible for PSLF by consolidating them under the direct loan program. Now, that includes your FFEL loans that we just talked about, the Stafford, the Graduate and Parent Plus, a FFEL consolidation loan can be reconsolidated into the direct loan program to be made eligible for PSLF. It also includes some more less frequently seen federal loans, such as federal nursing loans, Perkins loans, the old HEAL loans, and so on. Now, Under traditional PSLF rules, and this is something we're going to talk about under the waiver because it's different under the temporary waiver, but under traditional PSLF rules, if you consolidate the loans, any payments made prior to consolidation are not going to count for PSLF, even if they were made on a direct loan. So if you have direct loans and you consolidate them for some reason under traditional PSLF rules, but again, this is different under the waiver, your PSLF payment count is going to reset to 0. Now, which means that if you need to consolidate to qualify for the waiver, you need to do it sooner rather than later in order to get the most bang for your buck and get PSLF in the most efficient way possible. Private loans and other non-federal loans, such as state loans. So, for example, here in Massachusetts, we have the Mass No Interest Loan. Loans that you took out directly from the school. They're not as common anymore, but there were some schools that have their own loan programs within the school. Those can never count for PSLF. So again, an eligible loan is a federal direct loan. Most other federal student loans can be consolidated into the federal direct loan program to be made eligible for PSLF, but you in general want to do it sooner rather than later to make sure that you get credit for all the payments possible. And this is, again, under traditional PSLF rules. Now that we know what an eligible loan is, let's talk about eligible employers. Now, this is where a lot of the longstanding myths about PSLF, I find, come into play from working with borrowers. It actually does not matter at all what you do for a living. It matters who you work for. So the example I like to use, when we talk to public school teachers, they usually almost always realize that by being a public school teacher, they are potentially eligible for PSLF. What we also find, however, is that everybody else who works in the public school doesn't realize that they're just as potentially eligible for PSLF as the teacher is. Cafeteria worker, the custodians, the administrative assistants, the principal, because again, it doesn't matter what you do for a living. What matters is who you work for. And we're going to talk a little bit more about that in a second. And that falls under this aspect of it, defining what an eligible employer is, applies to both traditional PSLF rules as well as the temporary waivers. Nothing about what eligible employment is defined as has changed under the temporary waivers. Now, you do have to be full-time as defined by your employer, or you have to be working at least 30 hours a week, but that only applies if you're working for multiple eligible employers. So this is something else that sometimes people misinterpret. So to be clear, if I'm working for one eligible employer and I'm working 35 hours a week, and my employer defines full-time as 40, then I am not working eligible employment. However, if I stay working the 35 hours a week for that employer, and then I pick up even one more hour at another eligible employer, now I'm working at least 30 hours a week for multiple eligible employers, and that period will count. So again, it's full-time as defined by your employer, or if you're working for multiple eligible employers, you only need to work at least 30 hours per week. Now, the best way to verify whether your employer is eligible is to submit the public service loan forgiveness form and have it get verified as an eligible employer. Now, you do have to get the form signed off on by your employer. What they're doing is verifying the period of time that you've been working for them as a full-time, or if you're a part-time employee. And we also recommend that you use what's called the PSLF tool, which is at studentaid.gov, to fill out that form. And here's why. What the Department of Education has done is they've taken their database of all the PSLF eligible employers that they have already vetted, meaning at some point in time, somebody submitted a PSLF form with that employer on it. The Department of Education did their digging, checked their boxes, and determined that, yep, this is a PSLF eligible employer. And they put that in the database. If you use the PSLF tool for your PSLF form, and your employer is already in the database under traditional PSLF periods, periods of time and periods of processing, your form is going to get processed a lot faster than someone who doesn't use the PSLF tool, because that means that they know from the form that your employer's already been vetted and they don't have to do it again. Now, if you use that tool and your employer's not in there, that doesn't mean you still shouldn't use the tool, and that doesn't mean you're not eligible. It just means that you're the first person to ever submit that particular employer for approval before. Now, to be clear, you're actually not required to submit proof of employment until you've made your 120 eligible payments, but that's an awful, awful strategy. We strongly recommend that you get in the habit of submitting your proof of employment on an annual basis. What this does is it first of all, it's the only way, as I mentioned, to really confirm that your employer is eligible, so you're not caught with a nasty surprise. Number two, this starts the PSLF servicer in counting your PSLF eligible payments. So this is a way for you to know ahead of time if there's some sort of issue that's preventing you from accruing those eligible payments, rather than finding out, again, getting a nasty surprise at the moment that you think that you're eligible for forgiveness. So again, you're not required to submit annually, but we strongly suggest that you do submit annually. All right, so let's talk about what an eligible employer is. An eligible employer for PSLF purposes under both the traditional PSLF rules as well as the temporary waiver is any government employer. Now that can be federal, state, local, or even tribal. Now, if you're a contractor of any employer, whether it be, so, for example, if you're a contractor for the federal government, and every day you walk into a federal building, you sit at a federal desk, you answer a federal phone, even your business card seems to indicate that you're a federal employee. You're not actually an employee of the federal government or state or local or tribal, then that's not considered eligible employment, unless your actual employer is also a PSLF eligible employer, which usually that tends not to be the case. Most contractors tend to be private for-profit organizations. So again, unfortunately, if you're a contractor, that's not going to count for PSLF purposes. The other thing that does count as a PSLF eligible employer, you're considered a government employee if you are full-time in the military, Peace Corps, or AmeriCorps. Another type of eligible employer is any 501c3 nonprofit organization. You work for a 501c3, that is 100% an eligible employer, full stop. You don't need to check any other boxes. Where it can get a little more complicated is if you work for a nonprofit that's not a 501c3. Now, in some cases, those can also be PSLF eligible employers, but there is a few more hoops to jump through. In order to be considered eligible for PSLF purposes, a nonprofit that's not a 501c3, their primary reason for existence needs to be one of the bullet points that you see in front of you right now: public interest law, public education, public library services. Those, again, can be a lot more complicated to get approved. And I would suggest, again, if you're not at a 501c3 or government employer, it's even more important that you submit your proof of eligible employment before you get too far down the line, and make sure that your employer is actually eligible. And you cannot make assumptions of anything based on these bullet points in front of you. A lot of these bullet points, while they seem to be pretty clear what they mean, they're actually not as clear as we'd like them to be. They all have some definitions behind them. The example that I like to use, excuse me, is public interest law services. That seems pretty straightforward. Many people would assume that by public interest law services, that might mean an organization that provides free legal advice, pro bono legal advice, or maybe they do some sort of legal policy work. In fact, what it means, the definition behind this, is an organization that receives at least some of its funding from the government. So again, these bullet points are not as straightforward as they might appear, making it all the more important that you submit your proof of eligible employment on a regular basis, just to make sure that you're on track. A couple more things about eligible employment. Now, you have to be under traditional PSLF rules. You need to be employed by an eligible employer at the time you make every single one of your 120 PSLF eligible payments. At the time you apply for forgiveness, now that piece is waived under the temporary waivers, but under traditional PSLF, you do have to be working for an eligible employer at the time you apply for forgiveness and at the time the government reviews your forgiveness application. That part is also waived under the temporary waivers. So again, what isn't waived under the temporary waivers is that you'd be working for eligible employment at the time that you make every one of those 120 eligible payments. What is waived under the temporary waivers is that you also have to be working for eligible employment at the time of application and at the time of the review of your forgiveness application. But under traditional, so, after October 31st, 2022, if that's when you're going to hit 120, you need to make sure that you're still working for eligible employment when you apply. Now, you do not need to work for the same employer for all 120 payments. In fact, it doesn't need to be consecutive eligible employment or consecutive eligible payments. So for example, let's say that you graduate your undergraduate school, you go to work for an eligible employer and make eligible payments for 3 years. Now you've got 36 PSLF eligible payments under your belt because you've made those payments on a direct loan. Then you leave your job, go back to school to get your graduate degree. And so you spend 2 years not working for an eligible employer and maybe not making payments. Once you get out of graduate school and once again start working for an eligible employer, those 36 PSLF payments you already had under your belt are still going to be waiting for you. The only thing that can reset the clock for PSLF, and again, this is under traditional rules, is consolidation. So again, you don't have to have consecutive employment. You don't have to have consecutive eligible payments. So I'm going to take a breath and check in with Pat. Do we have any questions about what an eligible loan is or what eligible employment is before I move on?
No, Betsy, you're good.
Thank you. All right. So we know what an eligible loan is. It's a federal direct loan. We know what eligible employment is. It's working full-time for either a government employer, 501c3 nonprofit, or in some cases, other non-501c3 nonprofits whose primary reason for being is one of those bullet points that we had a couple slides ago. So now let's talk about what an eligible payment is. Now, under traditional PSLF rules, an eligible payment is one that's made on time. And for PSLF purposes, on time is defined as within 15 days of the due date. Now, a fairly recent change to the rules is they now allow you to make lump sum payments. Now, this may sound like really good news, and it's certainly not bad news, but making a lump sum payment actually does not get you PSLF any faster than not making a lump sum payment. So for example, let's say your payment's $100 a month, and in January you make a $1,200 payment. They're going to count that payment for the next 12 months, unless the only way that period of time would shorten is if your income-driven plan was due for renewal sometime in there. So let's say, using the same example, your income-driven plan renewal is in June. Your payment's $100 a month. In January, you make a $1,200 payment. You're all set through June in that case. But you're not going to get credit for any of those months until you submit proof that you were working eligible employment during every one of those months. And since you can't prove the future, you're not going to be able to prove those months of eligible employment until after you've worked them. So again, lump sum payments, they don't benefit you in respect to getting PSLF any faster, because there is no way to get PSLF in less than 10 years, full stop. That's the fastest anyone's ever going to be able to get forgiveness under PSLF is 10 years, which is 120 months. Now, who the lump sum payment rule does help is if you're lucky enough to work for an employer, for example, that maybe has a student loan repayment program. A lot of those scenarios, the employer is making payments on your behalf on like a quarterly or an annual basis. So in that situation, now that they've changed the lump sum payment rule, if your employer makes a payment towards your loan and that's good for 3 months of payment, you don't have to make the next 3 months of payment. So that's where it can be useful. Now, an eligible payment, in addition to being on time, also has to be made under an eligible repayment plan. And this, again, is traditional PSLF rules. Now, an eligible repayment plan for PSLF purposes is any of the income-driven repayment plans. Now, that's income-based repayment, pay-as-you-earn, revised pay-as-you-earn, income contingent repayment, or a 10-year standard plan. Now, here's another trip up that we find a lot of consumers run into, and this is where it can get a little confusing. So when you go into repayment, once you get out of school, if you don't choose a different repayment plan, they're going to automatically put you in what's called the 10-year standard plan. And again, payments made under the 10-year standard plan are eligible. Now, if you consolidate your loans and don't choose a different plan, they're going to put you on a quote unquote standard plan. However, it's not a 10-year standard. The term on a consolidation loan is between 12 and 30 years. And a 12-year or 30-year or 25-year standard plan does not count under traditional PSLF rules. And that was a hiccup a lot of borrowers ran into. They're like, oh, I'm on a standard plan, standard counts. They thought they were progressing towards PSLF. Unfortunately, they weren't submitting their proof of eligible employment to get to verify their payment counts and verify their employers. And it turns out that they weren't on an eligible plan all along. So again, this is traditional PSLF rules. Now, the other thing I want to point out is even though the 10-year standard plan counts, if you make 120 payments under 10-year standard plan, you're going to pay your loan off. So while those plans count, if you're pursuing PSLF, in order to really benefit from it, you really need to get on an income-driven plan. Now, back in 2018, Congress recognized that right after PSLF was written into law in 2007, that there was some miscommunication being given to borrowers out there, specifically about that 10-year standard plan versus the consolidation standard plan. Even some of the student loan people giving advice were incorrectly telling borrowers that the consolidation standard plan counted. So in recognition of that, in 2018, Congress put aside $750 million and created what's called the tePSLF, or the Temporary Expansion of Public Service Loan Forgiveness. The tePSLF does allow for other repayment plans. It allows for the consolidated standard. It allows for extended and graduated repayment. We're going to talk a little bit more about the tePSLF in a minute. But unlike PSLF, the tePSLF has a limited amount of funds, and it's first come, first serve. So unless you're really, really close to forgiveness and aren't going to get it under the waivers because you're not quite there yet, you should plan on getting on an income-based repayment plan to qualify for PSLF rather than counting on the tePSLF to help you. And again, we're going to talk more about the tePSLF in a minute. Now, again, eligible payments. Only payments after October 1st, 2007 count. That's because PSLF didn't exist before that. Payments made while in default, whether voluntarily or involuntarily, cannot count for PSLF. That includes under the waiver. In order to count, they have to be made while working full-time for an eligible employer. That's both traditional and waiver rules. They have to be made on a federal direct loan, and it does not matter who makes the payment. Now, Parent Plus loans are eligible for traditional PSLF and the tePSLF. A lot of families have an arrangement where the student for whom the Parent Plus loan was taken, so in other words, the one who benefited from the education, makes the payments on the Parent Plus loans, even though they're not legally the borrower of the loan. That's fine. And it doesn't matter who is making the payment when it comes to PSLF purposes. What does matter is who's working the employment. The only employment that can count for PSLF purposes, and that includes the waivers, is the actual legal borrower of the loan. So in the case of a Parent Plus loan, it has to be the parent borrower who's working for the eligible employment in order for it to count for PSLF purposes. Now, just to reiterate, for traditional PSLF, an eligible payment plan is the 10-year standard, income-based repayment. Both, there are actually two income-based repayment plans that are both exactly the same except where they're different. But don't worry, because both of them count. Pay as you earn, revised pay as you earn, and income contingent repayment. Now, a word about ICR. Now, I just mentioned that Parent Plus loans are 100% eligible for traditional public service loan forgiveness as well as the tePSLF. Where it becomes a catch-22 is that Parent Plus loans are, in and of themselves, are not eligible for income-based repayment, pay as you earn, revised pay as you earn, or income contingent. Now remember, if you make 120 payments under the 10-year standard payment plan, you're going to pay the loan off. So this just seems like an awfully mean trick for Parent Plus loans. However, there is a way around it. If you consolidate the Parent Plus loan, the Parent Plus loan then becomes eligible for income contingent repayment and income contingent repayment only. So if you're a Parent Plus borrower who's working for eligible employment, it's imperative, you really have to consolidate your loans and get on ICR if you are going to benefit from public service loan forgiveness. Now, you don't have to be on the same plan for all 120 payments. And again, they don't have to be consecutive eligible payments, but to count, they do have to be made on a direct loan while working for eligible employment. All right, so far we have defined what an eligible loan is. It's a federal direct loan, and that's for traditional PSLF rules. We've defined what an eligible employer is. An eligible employer is a government employer, a 501c3 nonprofit, or in some cases, some other non-501c3 nonprofits. That is the same for both traditional PSLF rules as well as for the temporary waiver. And now we've defined what an eligible payment is. It's one that's made on time while working for an eligible employer on a direct loan under either a 10-year standard or one of the income-driven repayment plans. Now, before I go in to the tePSLF, I wanted to see if we had other questions.
We're good, Betsy.
Okay. I apologize. I feel like I swallowed a bug. I'm pretty sure I didn't swallow a bug, but it feels like I swallowed a bug. All right. So let's talk a little bit more about the tePSLF that I mentioned a minute ago. Now, the tePSLF is not the temporary waiver. This program's here until the money runs out, which the nice thing about the temporary waiver is that all the loans getting approved under the temporary waiver are getting approved under traditional PSLF, which does not have a money cap to it, which means that the tePSLF fund is going to last longer. Now, the only rule that changes under tePSLF is payment plan. So eligible employment definition stays the same. Eligible loan type stays the same. The only difference is, pretty much with one exception, any repayment plan counts for the tePSLF. The only payment quote plan that isn't accepted even under the tePSLF is what's called the alternative repayment plan. Now, the alternative repayment plan isn't one that you choose, and it's not one that's used frequently today. But prior to the existence of most of the income-driven plans, so really prior to 2012, for all intents and purposes, alternative repayment was sort of something the servicers, they technically can still use it, could use if none of the existing repayment plans fit the borrower's budget. If you were on an alternative repayment plan, it's not going to count for either traditional PSLF or the tePSLF. But any other repayment plan would count. Extended repayment, graduated repayment, standard consolidation. The only other thing that's weird about the tePSLF is your last 12 payments. So if you've been on the wrong repayment plan, you can get those payments to count under tePSLF. You submit the PSLF form just like you would for traditional PSLF. But then you have to make sure that your 12th to last and last payment is at least as much as you would have paid under an income plan. Now, again, this only applies to the tePSLF. Now, the easiest way to do this is to get on an income-driven repayment plan for your last 12 payments. But for some people, their income-driven payment amount is a lot higher than what they've been paying under, say, the 10-year the consolidation standard, or say graduated repayment. So for those people, we always recommend you calculate what your IBR payment would be. You make that higher payment amount for the 12th to last payment, make your regular monthly payment for the next 10, and then do that same calculation for your final payment. If this seems confusing, we actually have it written out along with a case study on our website at the bottom of our PSLF page. Now, the great thing, another really cool thing that's going on is that during the COVID waiver period, so any months starting March 13th of 2020, and as of right now, extending through May 1st of 2022, those months count for all the PSLFs. It counts for traditional PSLF, it counts for the tePSLF, including for these wonky last 12 payment rules. And of course, it counts under the temporary waivers. You just need to make sure that you were working for eligible employment during those months, and those months are going to count. Now, the way to apply is you first submit your proof of your 10 years of eligible employment. Hopefully you've been doing it right along, but even if you haven't been, you can submit proof of all 10 years right now. But again, we strongly recommend that you do it annually. When you first submit, your loans will be transferred to Fed Loan Servicing, who is currently the PSLF servicer. That will be, although not like tomorrow, sometime by the end of the year, we expect the PSLF servicing responsibility will transfer over to another servicer called Mohila. But anyway, when you first submit proof of eligible employment, your loans transfer over to whomever the PSLF servicer is. At that point, they count whatever eligible payments you already have under your belt, and they send you a letter about that, and they put your counter up on your servicing account. After payment 120, and again, this is traditional PSLF and tePSLF rules, you would submit a PSLF forgiveness application. Now, it's all one form. It's different. It's just a different box that you check. There's one box that says, I'm submitting this piece of paper because I think I've hit my 120. And there's another box that says, I just want to know where I'm at. Quite frankly, it doesn't really matter which box you check. But if you're applying for forgiveness, check the I think I did it box. And as I mentioned before, if you use the PSLF tool to pre-populate that form for you, the process is going to go a lot faster. Now, once you submit that application, they're going to put that application for forgiveness, they're going to put your loans in forbearance while they review the application, unless you tell them you don't want to be put in forbearance. Now, if you've made over 120 payments under traditional PSLF or the tePSLF, they're going to refund those payments to you. Now, if, and this applies more to the temporary waiver, this really can't happen under traditional PSLF, but you should note that only overpayments made after, if you had to consolidate and the overpayments were made after consolidation, then you'd get them back. If they were made prior to consolidation, you're not going to get them back. But again, that really only applies to the temporary waiver. Remember that under traditional PSLF, if you consolidate, it resets your count anyway. All right, so as I mentioned, if your loans were eligible for the COVID waivers, and the way you know if they were eligible is if you look on your account and you're currently enjoying a 0% interest rate, then these months count for PSLF, traditional, and waiver, as well as the tePSLF, as long as we're still working for eligible employment during that period. Now, especially right when these COVID waivers were announced, I had a lot of PSLF borrowers who just said this sounded too good to be true, and they were nervous about screwing their PSLF up, so they kept making payments. If you were one of those people, stop it. These months 100% count. We've already seen people get forgiveness with these months included, and making payments during this period is the equivalent of taking that money out of your bank in cash, throwing it in your fire pit, and roasting marshmallows over it. Making payments during the COVID period, if your loans are eligible for the waivers, is not going to get you PSLF any faster. Temporary waiver or no temporary waiver. You can only ever get credit for 1 month per month for PSLF under any circumstances. So if you've been making payments or you've made any payments since March 13th of 2020, you can contact your servicer and ask for that money back, and they will give it back to you, and fairly quickly. I've seen a lot of people get it within 2 weeks. So I can't emphasize that enough. I know at least back in June of 2020, according to Department of Education data, there was something like 800,000 people that had at least one active, I should say approved employment certification form on file and had continued to make payments. I also know that we've worked with a lot of people who have since gotten the word and asked for their refunds and stopped making the payments, but there's still some stragglers out there. So again, if you're one of those stragglers, stop it. Okay. All right. Before I jump into the waivers, Pat, do we have any questions about anything we've gone over so far that you think, or something you think I should reiterate?
No, I think you're good, Betsy.
Thank you. All right. This is what I think most of you are here for. Let's talk about the October 6th announcement. All right. So everything we just went over has to do with traditional PSLF rules. And so these are the rules that applied before October 6, 2021. And these are the rules that are going to apply after October 31st of 2022. What I'm going over now are the temporary waivers. Now, I'm going to use the word temporary as often as I possibly can until you get sick of hearing the word. And the reason for that is there is a hard stop to these waivers. If you can potentially benefit from them, but you don't raise your hand, and that's a hypothetical raise your hand, or take the action you need to take to qualify for the waivers before October 31st, 2022, there isn't a person on the planet that's going to be able to help you. That is a hard stop for these waivers. So it's really, really important, again, to get the word out and for your own personal reasons, take whatever action you may need to take before the deadline. So here are what those temporary exceptions are. So payments made on a FEL loan or a Perkins loan or made prior to consolidation will be counted and are being counted under the temporary waivers. That's assuming that you are working full-time for eligible employment during those months. So they're counting any month that your loan has been in a repayment status since October of 2007, or since you took your loans out, whichever is later, while you were working for eligible employment. The only exception to that are for Parent Plus loans, which I'm going to talk a little bit more about in a minute, and for periods that the loan was in default. Because when you're in default, even though they're asking you for payment and you're due for payment, you're actually not considered in a quote unquote repayment status. So, but other than that, if the loan was in repayment, they're counting it. It doesn't matter if you were late. It doesn't matter if you didn't pay the whole payment. It doesn't matter what payment plan you were under. The only thing that it doesn't matter what kind of loan you made the payment on. The only thing that matters is that you were working full-time for eligible employment at the time. Now, let's talk a minute about Parent Plus loans. For whatever reason, they have excluded Parent Plus loans from the temporary waivers. Now, remember, Parent Plus loans are absolutely 100% eligible for traditional PSLF, and they are eligible for the tePSLF. They excluded Parent Plus from the temporary waivers with one exception. If you are air quote lucky enough to be a Parent Plus borrower who also still has loans that you took out for your own education. So that would be loans in your name that are Stafford loans or Graduate Plus loans. If you consolidate those loans with the Parent Plus, they will attribute any eligible payment period on the non-Parent Plus loans to the entire consolidation. So for example, let's say you have Stafford loans from your own education and you've made 80 PSLF eligible payments. Even if they were on a FEL loan or a Perkins loan, they're eligible under the temporary waivers. And then you also have Parent Plus loans. You consolidate those Stafford or Grad Plus loans with the Parent Plus, that consolidation will be given credit for those 80 payment months, eligible payment months that you had on the Stafford and Graduate Plus loans. However, if all you have is Parent Plus, you can't get credit for any of those months under the temporary waivers. But again, I think it's important to be repetitive because I understand how confusing this is. This does not stop a Parent Plus loan from qualifying for PSLF under traditional rules or under the tePSLF. Periods of deferment or forbearance continue not to count even under the waivers, the exception being people that were serving full-time in the military and had a military deferment or forbearance. They're going to automatically count those periods later in 2022. I'm not sure when that's getting implemented, but they are going to do it later in 2022. The other thing that is just under the waiver, and this was a particular surprise to me, normally you can't double dip forgiveness programs. So for people that work, for teachers that taught in Title I schools, which tend to be schools that have a high percentage of free lunch students, they were potentially eligible for teacher loan forgiveness, which forgives after 5 consecutive years of teaching at a Title I school, you can get either $5,000 or $17,500 forgiven. But that 5 years under traditional PSLF and tePSLF, you can't use that same 5 years towards the 10 years you need for PSLF. But under the temporary waiver, you can. So this is a huge gift to teachers. So again, on temporary waiver only, the period, if you already received forgiveness under teacher loan forgiveness, but still have an outstanding balance, you can now count those 5 years. They're reviewing every account in-house. If they've received an employment certification form from you in the past, they're going to review your account that's part of the waiver, that they're reviewing every account that's in-house. Now, again, just to reiterate, they are only looking at months in repayment status, nothing else. So when the waiver was first announced, I had a lot of borrowers, I still do, that were scurrying to try to retrieve their prior service or payment histories and bank records and all that. You don't need to. They're not going to look at any of it because none of it matters. The Department of Education has their own data. Since student loans were born, servicers are required to submit, it used to be monthly, now it's a little more frequently than monthly, the loan status and balance on the loans they hold to the Department of Education. And again, that's been done since the dawn of time. So that is the data the Department of Education is using to give credit under these temporary waivers. Now, we also are aware that the very first direct loan servicer may have incorrect or flawed records. Now that servicer doesn't exist anymore, but may have transferred incorrect or flawed records, or may have reflected, one thing that we're seeing a lot are, on the Department of Education's website, it looks like you were in grace period for 2 years. It's impossible to have a 2-year grace period. The Department of Education recognizes all of that. And that's one of the reasons they're utilizing their data that they have on their website. And they're also addressing and fixing things like this 2-year grace period and so on. So again, you don't need to go, you don't need to be requesting FOIAs or to get all your loan records or go back and get your bank records. They don't need any of that. You should be getting the correct count on your loans under these temporary waivers, just based on the data the Department of Education has. And if it's wrong in the end, we'll talk in a minute about what you can do if you still don't think you get an accurate count. Now, a little bit more about the waivers. In order to get credit under the waivers, you must consolidate any ineligible loans you have into the direct loan program. Now, an ineligible loan, remember, is a FEL loan, a Perkins loan, and so on. You have to consolidate that into the direct loan program prior to October 31st, 2022. The other thing you have to do prior to October 31st, 2022 is to have at least one approved employment certification on file. Now, if you already have all direct loans and you already have submitted proof of eligible employment, then you're already potentially eligible for these temporary waivers. And other than perhaps to make sure that you've submitted proof of all periods of eligible employment, you shouldn't have to do anything but wait. And I know that can be the hardest thing, is to wait. But if you already have all direct loans and you've submitted proof of eligible employment, then you'll be counted under the waiver. Now, this part could be a little bit confusing. Now, remember, under the temporary waiver, any period of repayment counts. Doesn't matter what plan you were on, doesn't matter if the payment was late, and so on. But that only applies either up to October 2021, or if you end up having to consolidate. So if you end up consolidating somewhere between October 2021 and October 2022, up to that consolidation. Now, let me give you, so with the COVID waivers, with the loans going back into repayment in May, it's really important, unless you're going to be at 120 under this waiver, it's really important that you get on an eligible plan as of May. So let me give you an example. I found out about the waivers in October. I had some FEL and Perkins loans. I consolidated them in December. I'm going to get, come May, I need to be on an eligible payment plan for payments after May to count for PSLF purposes, even under the waiver. But let's say I didn't consolidate until September. So I get in right before the temporary waiver deadline. In that case, I'm going to get credit for payment periods up until September. Now, I am by no means encouraging anybody to wait to consolidate. I don't think it's worth a couple extra payments to wait on the risk of missing out on the waiver, but just to explain how those repayment months count. There's a lot of people who think that even after the COVID waivers are lifted in May, that they can stay on an ineligible plan through October, and that is not the case. You absolutely need to get on an eligible plan once the COVID waivers are lifted in May. And just to reiterate, you do still have to be working for an eligible employer for every single one of these months. Any payments made over 120, and I talked a little bit about this earlier, you will get refunded. So, but it's only post-consolidation overages that get refunded. So for example, let's say I've had FEL loans this whole time. I made 160 payments while working for eligible employment on those FEL loans. I find out about the waiver, I consolidate, my loans get forgiven right away. I will not get a refund. But second scenario, let's say Pat had FEL loans, but she made 30 eligible payments on the FEL. But then she figured out she had the wrong loan type, so she consolidated some years ago. And now she has, including those 30 she made under the FEL, now she has 140 payments. But 110 of those were made after consolidation. She's going to get those 20 extra payments back because the overage happened after she consolidated. One other thing I want to talk about when it comes to consolidation is someone else. So if you have all direct loans, but those direct loans have different periods of repayment, you should also be consolidating. So for example, you went to undergraduate school, you took out some loans. After undergraduate, you started working for an eligible employer. And then you went to graduate school, took out more loans, kept working for an eligible employer. So as of today, your undergraduate loans have 80 PSLF eligible payments. and your graduate loans have 40 PSLF eligible payments. Under the waiver and under the waiver only, if you consolidate those loans together, the total consolidation loan will get credit for the 80 payments. And to be clear, to get credit under these waivers, you actually do not have to hit 120 by October of 2022. So in the scenario I just gave you, the fact that I still have a little under 4 years left to qualify for PSLF is fine. Come November of 2022, I'm still, that consolidation loan that I made during the temporary waiver is still going to have those 80, or at that point, however many payments it has. And when I hit 120, I hit 120, and that will still count. So again, if you have loans with different repayment counts, you should consider consolidating them together to get, so that consolidation gets credit for the higher count. Now, unfortunately, paid in full loans do not and cannot count under the temporary waivers. So loans that you may have paid in full in the past, you can't count those. Unfortunately, I've seen some people who just, again, they fell under that this sounds too good to be true, and they only consolidated some loans and not others. And some loans ended up getting forgiven because those loans had a higher payment count, and the ones they left out did not. Those are not going to get forgiven. Those will still have to accrue the final payments they need for the 120. And unfortunately, there's no sort of take backsies on it. If you think it's possible that some of your loans may be at 120, but not others, I would recommend consolidating first and then submitting your proof of eligible employment, just to make sure that all the loans possible get credit for the highest payment count possible. As I mentioned, under the temporary waiver only, consolidation 1,000% does not reset the forgiveness count. Now, I emphasize this because there's still some language out there. In fact, you may even get a letter once you consolidate that says, hey, by the way, this could reset your count, because these waivers happen pretty quickly and it can take a long time to get letter language changed. In fact, the consolidation application itself, I believe, tells you that consolidation will reset the count. You can double check the Department of Education's website, our website, but I'm here to assure you that during the temporary waiver period only, consolidation does not reset the PSLF forgiveness count. As I mentioned, if the loans you're consolidating have different payment counts, the consolidation will be assigned the highest count. And if the loan was consolidated more than once, they're counting all prior periods of repayment. I also want to just, as an aside, I know this is heavy stuff and still lighten it up a little bit. When I was putting this presentation together, and I'm about to date myself, I was really surprised and went down a Google rabbit hole when I saw the count, because I don't ever remember the count having facial hair. So I went down a Google rabbit hole to check it out. And now I guarantee you that at least half of you on this call are also going to end up going down that Google rabbit hole. And I'm going to leave you hanging about whether the count on Sesame Street had facial hair back in the 70s or not. I'd appreciate if you waited until after the presentation was over, but just sort of a fun fact to talk about at dinner tonight. All right, so here's what to expect. There's really two phases to this temporary waiver review. First, there's the initial review that Fed Loan Servicing is doing. Now, they are using waiver rules for that review. However, they may not have, and at this point, they likely don't have, all the data that the Department of Education has. That data is starting to trickle into Fed loans. But for most people at this point in time, or anybody that's received any type of correspondence about this up to now, most likely the first letter you get from Fed Loan, although technically correct, is not going to reflect your accurate repayment count under the waiver. You need to sort of put that letter aside and wait for the final count to be done that includes the data that the Department of Education has. The other thing that you will probably get, for those of you that end up consolidating, you're going to get a letter that may freak you out a little bit saying, yep, your loan's consolidated, you have 0 PSLF payments. Don't worry about it. They still have to count your payments under the temporary waiver and with the Department of Education data. So it's just hang tight. I promise you that it will come. Again, as the Department of Education starts to feed the data they have to Fed Loan Servicing, so as time goes on, I think we're going to see that, the period of time between the first letter and the second letter will get shorter. But overall, for the accounts that were already in-house, so in other words, people who at some point prior to the temporary waivers being announced had already submitted proof of eligible employment at some point, we're hearing that most of those accounts will get at least their initial review by, say, March or April. If you're someone who didn't raise your hand until after the October 6th waiver, because you heard about the October 6th waiver, I would, this is anecdotal information coming from the borrowers that I work with, but I would expect I'd give it around 90 days. Now, I know it's frustrating. I know that there are some of you that have been maybe waiting for a review or waiting for forgiveness for some time. There is no way to get to the front of the line. Calling, filing a complaint, none of the, filing a dispute, filing something with the Department of Education Ombudsman is not going to get you to the front of the line. They are going through every account, and no one borrower is more important than another borrower. I mean, you're all important, and all your accounts are important, and they will get to them. Now, that's not to say you should never file a complaint. If once you know you've gotten the final count, and you still think that it's incorrect, you should absolutely file a dispute, either with the PSLF Servicers Ombudsman's Office, the Department of Education Ombudsman's Office, or at some point in the fairly near future, the Department of Education is releasing what they're calling a PSLF reconsideration process. So once that's up and running, you can file your dispute through there. But what I'm saying is, until then, I would ask you to not add to the call volume that's already there, and just be patient and wait for your count to come. I promise you that it will come. Now, if say, I had a borrower the other day that their employment certification form got rejected for having no signature. Well, it turned out it did have a signature. That's absolutely something that you should be calling about right away, or emailing about right away, or asking for that to get something like that. Doesn't really need to be escalated. You just have to get someone to take a second look at it and realize that somebody had made a mistake. But again, just remember, patience can be really hard, especially for something that can have such a big impact. But have patience. I've worked with, at this point, thousands of borrowers that have received that happy forgiveness letter in the mail, and people that have gotten pretty big refunds actually as a part of that. Speaking of those refunds, the refunds don't come from the PSLF servicer. The refunds come from the Department of Treasury. So the servicer can't tell you exactly when the refund is going to be. If you're expecting a refund, if they have your bank information, it'll come through ACH from Treasury. And that's been taking, from what I'm seeing, anywhere from a couple weeks to about a month. And then if they don't have your banking information, they're going to send it by check. Not only is Treasury going to send it by check, if they're refunding, if you had 33 payments that they're refunding, they're going to send you 33 checks. I'm not sure why, but the Treasury is going to send you 33 checks if that's how many payments you have coming back to you. If you have 2 payments coming back to you, they're going to send you back 2 checks. Again, if it's done with the bank, if they have your banking information, they'll send it by bank. The checks have been taking, I've seen it take up to 2 months for the checks to come from Treasury. And as a reminder, you only get a refund for what you actually paid. So I have a bunch of borrowers that they technically hit payment 120, even under the temporary waivers during the COVID period. Well, during the COVID period, you haven't been paying, so there's nothing to refund. So it's not, they're not calculating a dollar amount. They're literally calculating, okay, he, she, they hit their 120th payment effective June of 2019. They're going to refund every payment you made after June 2019. So
Betsy?
yeah, hang on one second. I just
Okay.
that's what I have for you. So we've covered traditional PSLF rules, we've covered the tePSLF, and we've covered the waivers. What you have in front of you now are some resources that you can use. If you're someone like me who learns better by reading rather than listening, I strongly suggest you look at both our website as well as the Department of Education's website for all the FAQs. We have a pretty extensive FAQ document on our PSLF page, as well as, sort of revisiting these rules. And with that, Pat, bring on the questions.
Okay. Just a few things to clarify. There was a question about the COVID waiver period, the 0 payments. Just to clarify that those do count towards PSLF. Whether or not you have to worry about the waiver. So you are getting credit for those months. Another question kind of reveals that there's always confusion because there are the Perkins loans and the FEL loans that are the ones that are federal student loans, but they're not direct. The FEL loans oftentimes are referred to by some of the servicers as private loans. So when people were eligible for the COVID waiver benefit of the 0 payments, that 0 payment didn't apply to FEL loans. And the servicers would say, well, that's because they're private loans, but they're not truly private loans. They are federal student loans. So when we talk about consolidating loans in order to get the benefit of the waiver, we're talking about consolidating federal student loans. So there are true private loans, and those cannot be consolidated. But these other loans that servicers call private loans, such as the FEL loans, those can be consolidated.
Yeah, just to further clarify that, sometimes those loans are also called commercially held loans or private loans. Here's the thing. If you have a Stafford loan, or if you have a graduate or parent plus loan, or if you have a federal consolidation, or if you have a Perkins loan, those are absolutely federal student loans. They may not have been eligible for the COVID waivers, but they are absolutely eligible for the temporary PSLF waivers.
And then another issue is that people who have made 120 payments and are no longer working for a eligible employer, they can fall under the waiver and get forgiveness of any remaining balance they have. So say they had FEL loans, they made 120 payments, they retired, they were turned down. Those people now are eligible. But if you retired and you're not at 120 payments, then the issue for you would be that you don't have enough payments and you would have to go back to work for an eligible employer in order to get the missing payments.
Really, really good clarification, Pat.
And then somebody did want confirmation about the consolidation issue. So once again, when you consolidate loans that have different payment counts, so one loan has a payment count of 50 payments and the other has 30, the new loan, if there's overlapping payment periods, the new loan will get credit for 50. So it's not the sum of them, it's the higher of the, it's the highest number of payments you have on any loan that is part of that consolidation.
Yeah, it's every unique repayment month of all the underlying loans. And the highest count. The Department of Ed may have some examples. We definitely have some examples and case studies on our website that can help clarify that point as well. I said this in the beginning. I think it's worth repeating. Especially because of the temporary nature of these waivers and the enormous benefit that it's having on borrowers that may not have ever gotten forgiveness under PSLF. I can't encourage you, every single person on this call, enough to go back to whomever it is that you work for and encourage them to share information about PSLF. It doesn't have to be a waiver. It doesn't have to be something like a webinar, although hopefully you're finding the benefit from this webinar. But at the very least, encourage them to send an email out to everybody at that PSLF eligible employer, notifying them, giving them the link to the Department of Ed's website or our website or both. And then encourage those people, because even if, they also might have people at home or other people they know that might qualify for it. It's just so important for us to do outreach on this and share it with as many people as possible. And I've come to the conclusion that one of the best ways to make sure this information gets out there is through the PSLF eligible employers. And if you are such an employer, I hope you realize that this is a really valuable free benefit, that just supporting your employees with it. It's a huge recruitment and retainment benefit as well. I talk to so many borrowers that fully plan on staying at their job, if for no other reason than because of PSLF, because they know it's a qualifying employer and they don't want to mess with it. I know many other borrowers that are only looking to work for an employer that's a PSLF eligible employer. So again, spread the word. And for you PSLF eligible employers, please support your employees with this.
And Betsy, one more question that came in. Somebody had previously submitted a PSLF form and was rejected. And they are saying that those people will automatically be reconsidered. So you should not have to submit another request. But if you don't hear, would you say, Betsy, in the next few months, they might
I would. So what's interesting is that was the messaging when the waivers first came out, but the I don't know if it was the letter that's been going out this week or the update they made last week. They sort of hinted that if you submitted something, a couple of years ago and it was rejected and you haven't gotten an update by, say, March, it probably wouldn't hurt to send in a new form. All right, was that it for questions, Pat?
Yes.
All right, we've got another 10 minutes. I'm happy to hang out in case more questions come in. I'm not sure if Kathy, what do you want to do, Kathy?
Yes, well, we can hold the webinar open for a few more minutes if anyone has additional questions. If anyone does have to depart at this time, we thank you again for joining us. And, please let us know in the Q&A box at the bottom right of your screen if you do have additional questions. We hope those who have to leave at this point have a great afternoon. And thank you again to Betsy and Pat for their assistance on this webinar.
And I want to thank the Senator's office again for holding this webinar. As for reasons I've said multiple times on this call, I just think this was so important. So I really appreciate you recognizing that and offering this to your constituency. I guess, I think I'll take advantage of these couple minutes to warn people about scams. All these waivers are awesome, but unfortunately they tend to create opportunities for student loan scammers. And I hear from borrowers all the time. In fact, we had one last night, Pat and I did, who had gotten a phone call and paid a lot of money that they did not have to a third party who claimed to be able to get loan forgiveness for them. Consolidating your loans, going to PSLF, any program under the federal student loan programs is absolutely 100% free to access, and they're not difficult to access. Consolidation is crazy easy, and you just go to studentaid.gov, you do it right online. They populate most of the stuff for you. There is never a reason to pay anybody for help with your student loans. And not all, but many of the people that ask for that, especially if they promise forgiveness, is likely a scam. So if you get a call like that or an email, I strongly recommend that you report them to the Federal Trade Commission at ftc.gov. They've been doing some really great work in cracking down on these scammers. But unfortunately, it's like whack-a-mole. They take two down, one more pops up. So again, if they're just because they charge a fee doesn't make it illegal, but there is never a need to pay a fee for help with your student loans. It's one of the reasons that we started Tisla, is to make sure that people had a place, a neutral third party they could go to. I mean, you should always go to your servicer first. They hold your loans. They're going to be in the best position to know what you're eligible for. But if you ever feel like you need a second opinion, there are organizations such as Tisla out there, but you absolutely definitely should never have to pay for help with your student loans.
Okay, we will give a last chance for any final questions before we close. Is there anything else at this point that anyone wanted to ask? Pat, confirming with you that there are no more questions that need to be addressed?
Well, somebody wanted to know, I answered it, but somebody wanted to know whether you can get credit for payments prior to applying, and the answer is yes. You can actually apply anytime in the process. It's just that if you don't have enough payments, you'll be declined, but you'll get a payment count. So you can basically apply at any time. But you're not eligible for forgiveness until you've made 120 payments.
And could you also just review one more time for people who are enrolled in the program already through the traditional rules, if they originally had payments that were not counted, what they should do at this time to see if those payments can count?
Yeah, so they want to make sure that they submit proof of eligible employment for the period that those payments happened. And if those payments were ineligible because they were made on an ineligible loan, like a Fell or a Perkins loan, and that loan hasn't already been consolidated into the direct loan program, they need to make sure they do that. And they need to do both of those things before October 31st, 2022.
Thank you.
Thank you. That's it's an important thing to have reiterated.
Okay, well, seeing no additional questions, we will go ahead and wrap it up. Thank you again to Tisla and to all of our attendees this afternoon, and we hope you have a great day.
Thank you.